You guys are going to learn a lot in this video. We're going to go over a quick trade recap of all the trades that we took and I called out over the week in my signals chat. And here is the trades that I took all week. Now, not only am I going to share the screen and show you guys the charts and we're going to break it down live to show you guys what it looks like, but you guys are also going to learn how I enter, why I enter, what's the reason behind it, how I find my levels, and why I'm thinking the way I'm thinking as far as either a breakdown for some puts or calls. We're going to go over the losses as well because guys, this week we did 5 wins, 2 losses. If you took at least one contract of every single trade that I took, not only last week, but even this week that just happened, you would have been profitable on both weeks. So with all that being said, let's share our screen and show you guys our entries, as well as the call outs from my signal chat. And let's break it down why I entered on this recap. So let's go right into the video. So just to provide some context, I'm gonna give you guys my spot levels that I was watching this week. And I posted this on Sunday, the night before the market opened at 1:30 p.m. saying that these are my levels that I'm gonna plan on playing this week. Now, all of these levels got hit this week, guys, which is amazing. Besides all-time highs. Of course, the market didn't hit all-time highs this week, which is totally fine. But every single level that I called out below that ended up hitting. And we took trades on these levels based off these levels as well. So let's go into the first trade, which was a loss. So the first trade that I took was a breakout trade. Now, it was a loss, unfortunately, on my end. And I did call this out for $104 a piece at 6:45 a.m. 15 minutes into the market opens. I called out the same day expiration, 5.99 calls for $104 a piece. It's a breakout trade. So I expected us to honestly continue on some new higher highs on the day, but we got freaking wreck. And let's show you guys why I even got this level. So this is the green level that I have right here for some calls, because not only is it pre-market high, which is right here, but it's also after hours highs. And if you look at the most recent reaction here, it's a pretty nice reaction. So this is a very good level. Every single time we hit this general area, it tends to reject. But at market open, the first 15-minute time frame candle did not reject. And this is where we got wrecked, unfortunately. So I called out a bad trade on my first trade, first 15 minutes into the market open. It looked good. The first 15 and 30 minutes of the market being open, it looked amazing. I expected us to continue on, especially after this candle right here. And I called it out based off this candle right here. This is where I entered, guys. I entered based off this candle because what I expected from this, although it is kind of a reversal candle, is I expected us to continue on higher. The reason being is because look at the long wick to the downside, holding that little support or resistance level that was once a resistance and now it's a support level. It was holding it perfectly, but unfortunately, the next candle just immediately wrecked us on down, and we got out of those contracts for $50 a piece, a little bit over 50% loss on this single trade alone. So we entered for $104 a piece and sold them out at $50 a piece. So it was a pretty bad loss. Over 50% loss on this single trade. Not too sure exactly what had happened. What I could have done better there, maybe wait for another 15-minute candle, but that's not my trading strategy. Usually my trading strategy is nice breakout, retest here, break and retest type strategy. Unfortunately, this one did not pay us at all. So that was the first trade. Now the second trade paid us over 30% in gains on this single trade, and this was a very good trade as well. Now this is one of my levels that I called out, which is 597.50. As you guys can see from right here on one of my levels, I have it listed as support / puts level, because if we do bounce here, maybe we might bounce here as a support, but anything below it is a put entry. Now let's talk about this trade, because I called out this trade, same day expirations, 597 put for $67 a piece, and we sold out of these at $100 a contract. So let's talk about this. Now, the reason why I entered this trade is because not only is it a breakdown of a specific level, but look at these candlesticks, guys. What are these candles telling you? They're long wicks to the upside as we're breaking through the support level. This is a breakout trade plus a retest. So it's a break and retest type strategy. And what I love about this is look at the long wicks to the upside on these two candles. Long wicks to the upside indicate that sellers are stepping in and they no longer want to take it above. Look at the volume. The volume is indicating that sellers are nowhere to be found. Buyers are super weak and it's most likely not going to climb back above. So we decided at 8:02 a.m. to call this trade for a $67 entry of 597 puts, and it paid us over 30%. Now the entry was on this candle right here. Reason being is because after I saw a long wick to the upside, you know what, I decided it's looking good, guys. We're probably gonna get another long wick to the upside. Last candle's already broken down. This is a break and retest type strategy. Let's go for it. And what had happened? It hit our price target, 30% gains. I had to hold it for over 30 minutes, but it was well worth it because the next 15-minute candle after that one was a massive fat sell-off candle. Now, as soon as it hit this price target, or even this level in general, which is another level that I posted in my tab saying that this is a retest of support, it is just another support level, I ended up selling for 30% gains. And I'm glad I did, because I wouldn't have been able to hold through this next candle, which after that close, you look at this next candle, long wick to the upside, which at one point, guys, just mind you, at one point, this candle was a green candle, a massive green candle. But sellers stepped in, took major control and turned it back to red, and they took control completely, which is why you get another breakdown of this most recent support level even more further down. Now look at these levels and how important it is to find your own levels as well, not only just using Fibonacci retracements, but these levels get hit perfectly to the T, because we ended up bouncing at this 594.35 level, which is a level that I have in my tab posted that I plan on trading. So anything below that, I'm entering on puts. Now, that was the second trade. So let's talk about the third trade this day, which is the same day on Tuesday, and it was AMD puts. Now this trade also paid us 35% on the day. So every single time we do a recap like this, it's really just so that we can come together and understand what we need to take in as a lesson from this week's to next week's. Now let's talk about this trade setup and let's talk about this breakdown. Now this is another break and retest strategy here. Break and retest strategy pays me the most. It has the most highest risk to reward ratio, low risk, high reward. Reason being why I say that is because of this. Give you guys some context of why I even entered this trade in the first place is because if you guys see over here in this general area, look at this. Every time we hit this general support, it ends up bouncing. But this day we did not bounce. We got a nice break, which here's the break. And here's the retest. So I called out this trade at 8:18 a.m. Same week expiration for 144 put, which is at the money. It was just a few cents away, so it was very confident that I was going to continue and put us in the money. But also, guys, the breakdown is very simple. Break and retest type strategy. As soon as this candle shows that there's some weakness, no buyers in the volume, we enter for a nice entry and it hit our price target of 35% gain. We took these contracts from $200 of entry to $266 exit. $66 a contract. That's a very good gain off a single $200 entry. Now this last trade put us a nice profits on the day. Now for anybody curious where I would have exited if it would have went the opposite way, if a green candle broke back above the support and even started climbing up a little bit more above this most recent resistance, then I'd probably end up cutting it for a major loss. Probably be down about like $80 on the day off of this loss alone, but it went instantly in our favor and this one paid us nicely. So that's Tuesday's recaps. Let's go on to Wednesday, Thursday, and Friday. So this trade was 30 minutes before the market even closes. I should probably have not taken this trade. That's the lesson I'm taking into next week is the fact that I probably should not have taken this trade at all. Now, I did call it out, unfortunately, and the entry was pretty horrible because as soon as he entered, it literally instantly got negative 20% fast. So I called these contracts since the market was closing 30 minutes after. I decided to take next day's contracts. Next day's contracts for $115 a piece, and we exited these at $81. So they lost a tremendous amount of value, and the entry was based off of this candle right here. As soon as I saw this reversal type candle long wick to the upside indicating that no sellers, that no buyers are here, I expected us to continue on downwards for that momentum. But as you guys can see, the next candle literally instantly rocketed and we had to close as soon as that candle closed for a loss, unfortunately. Trading 30 minutes to an hour before the market even closes is pretty dangerous already in itself. You can catch some good trades, but this was a very bad call out, and I'm sorry for anybody that took that because this day was the only trade that I called out one trade and it was a loss. Next time I know I'm going to take the lesson into next week to not call out any trades or even enter trades the last minutes of market being open. Mind you, this trade wasn't even breaking it below a specific level. It wasn't even at a nice resistance or area where we should actually take an entry on anything. I was just playing based off of the candlesticks alone. And if you throw on the 9 EMA, it also was following the 9 EMA right here. So I expected us to continue on downwards, but we got instantly wrecked. Now, with that being said, the next day on Amazon, we took 2 puts, same contracts, and they paid nicely, guys. Now, the reason why I even entered this trade in the first place was because I grabbed the most recent support level. Mind you, this is all-time highs right here. I grabbed this high of this wick right here, the low of this wick right here, and extended it all the way out to the next day as a nice support level. So I called out Amazon 212.50 puts at $150 a piece. Now, the reason why we exited so freaking fast for only a $10 gain, 7% gain on my end, we saw 20%. If you go back in my vlog, you guys will see. But when I live traded it, we saw 20%, but we were shooting for more. But as soon as we entered, somebody in our chat, one of our members named Landry Capital, entered calls. So I was in puts while he was in calls. His calls did get some good gains, but it just ended up doing a retest in this general area for a break back down to the downside, unfortunately. So I took a quick cut. As soon as I found out he was entering calls on the support, I decided to another a $10 gain on this contract. So we took these contracts from $150 entry to only a $160 exit. $10 entry to exit. Now, what we could have done better maybe is let this candle do its thing, get a nice close right at a resistance level, and watch the next candle break down. Because ultimately, all we did was chop around this general resistance level and break back down all the time. Now, these contracts would have lost value over time just holding it as long as you would have if you would have had a stop loss above this resistance level, which I'm glad we did exit because this trade would have been emotional roller coaster for sure. Just look at all this choppiness, guys. Now, I did call it out again. Same contracts, except cheaper, $140 a piece off of this nice breakdown. Now, the reason why I entered here, because look at this, we're breaking the most recent price action, the most recent candles, a nice breakdown below for some new lower lows. And if you grab the trend line and draw its quick trend line, we're breaking down below, guys, pretty nicely. So I decided to enter some quick puts for 140 a piece, and we exited at 161 a piece. So that was a little bit over $20 a gain on a quick in and out type of contract. Now, the reason why I exited it was because I wasn't sure if we're gonna do a double bottom bounce here, which we actually kind of did just for a little bit to test this general area and then another break back down. So no way I would have been able to hold for that little bit of support. We would have probably been down like 10, 20%, plus markets coming close to being closed. Those value of those contracts probably would have lost a decent amount. So that was 2 trades in one on the same exact stock on Amazon, and we did print at least in profits nicely that day as well. Very tough day considering that the choppiness was pretty horrendous, but we still managed to profit in this day. Now, Friday was the breadwinner. Friday was the best day to enter some good trades, guys. We ended up printing off of one single trade. First 15 minutes of market being open. Matter of fact, we entered this contract the first 10 minutes of market being open. So this was another break and retest type strategy. We entered these and got 30% gain on this trade. And the reason why and how I even got this trade was because if you guys look over here in this general area, you guys will see nice support there, nice support here, and a decent support there. So I decided to mark off that level and I decided to take puts below this general area. Now, there is a major lesson to be learned on this day, to be very honest. Because I have every reason to hold this trade, to be very honest. I have every reason to hold it. Now, for anybody that watched the vlog on Friday, you will see this was a live trade. I recorded it, recorded my screen, recorded my P&L on my phone, and recorded my face to see my reactions as well. Do not get me wrong though. As soon as we entered off this long wick to the upside, indicating that, again, it's a nice break and retest type strategy, sellers are stepping in. I just exited because it was a nice gain, 33%. 33% was a very solid gain. I decided to exit here. But look at my risk reward ratio. It wasn't that great. And on top of that, look at what it could have and would have been. It could have been very great gains. I mean, massive amounts of gains. I mean, I left so much money on the table here. But like I said earlier, we do not like to look back at trades and beat ourselves up unless we're doing our recap to show what we could have done better. So with that being said, next week when I do trade again, what I need to learn is if it doesn't go above your resistance level or even your stop loss in general, hold that bad boy. Because look at how much these contracts have gained values. I entered these contracts at $102 a piece, sold them at $127, exit. They went to $500. Now, I probably would have not been able to hold for the whole $500, to be very honest. Maybe I would have got out here or on this next candle here if I would have done better. So with that being said, guys, I need to learn and do my absolute best next week. The same lessons that I'm learning from last week, I need to keep learning them and bringing them all and over. Because one day, guys, I'm going to take one single contract and gain over 300 to 100%. Of course, that's not the goal. The goal not here is to not make 100% on a single trade or flip my money every single trade. That's of course not the goal. Because there are times where I exit and I'm very glad I exited because it ends up reversing. So with that being said, what I do need to do is take into consideration that if we're not above our most recent resistance level, plus on the 15-minute time frame, as you guys can see, this is a bear flag, bearish pennant, whatever you want to call it. It's indication for more downside action. Nice breakdown below recent lows. We could have got paid even more money. So all in all, what it really is, guys, is these are just lessons. Learn from our mistakes. If the setup is good and the setup is amazing, you can print a lot more money. You need to trust your trade plan, which is something that I'm still learning. Of course, we saw a nice 33% gain, and that's why we exited, because it was a very nice profit. But this day could have made us well over $500. Now I had 3 contracts, maybe even $600 to $1,000, $1,500 if I was able to hold all the way through. So with that being said, guys, that is this week's lesson. It's just to hold longer and trust the trade plan as much as I can. Now, of course, when I say hold longer, I don't mean if it breaks above your most recent resistance level, just hold it. No. This trade setup is perfect. We're doing a nice bearish flag, holding below the most recent support. Now it's acting like a resistance. Guys, this is a perfect setup to hold for some good gains and trust the trade plan. Or better yet, leave a runner. Sold 2 and keep 1 and let the last one ride as much as it can. Let it follow the 9 EMA, which is a lesson that I talked about last week. Didn't do it this week, but next week, coming up, we're gonna do our absolute best, even if I have to take some losses, to hold and regain all the profits on a single trade. Now, there were some bonus trades that I took myself, and let's just talk about one of them, which is SPY. I swung SPY puts Thursday night until Friday morning, and I made 200% gain on a single trade. Now, why and how did I do that? And what was the reason why I even entered? Let's talk about this for a quick second. Now, the reason why I took puts and swung puts overnight, which I entered, guys, here, swung them all the way down to open here, which was 200% gain. The reason why I did that and how I spotted that this was going to happen is because look at this massive range that we have on SPY. It looks better on the 4 hours. Let's go on the 4 hour. Look at this massive range on SPY. Grab the most recent highest wicks or just this most recent wick right there and the low wicks right here. Look at this nice range, guys. This is a very nice range. A breakout to either direction, you could enter a contract for either direction. Whether it breaks up, maybe take calls, breaks down, take puts. So I entered puts. Reason being is because as soon as you get a nice hourly candle close below, we decided at the very last minute of market open, a couple minutes before the market even open or closes, I decided to enter some puts and swing some puts overnight. Now, I'm not a swing trader, but I decided to enter for a cheap contract and see what happens. As soon as market opened, you guys saw my Friday's vlog. I sold because it started to retrace back up a little bit on the 5 minutes, 15 minutes, whatever. The 5 minutes did climb up a little bit, but ultimately all day it broke below, man. These contracts went from $14 entry to an exit at $45. So they went all the way up to $300, man, off of $14 entry. Now, of course, what I am trying to say here, because I'm not trying to say, man, I should have held, woulda. What I need to learn is that if the trade setup is perfect, man, lost the massive support on the 4-hour time frame and the daily, you need to hold. You need to freaking hold. Because look at how much it printed. That's a fat drop. So I appreciate if you watched all the way through because you guys have learned from my mistakes. Now, this week's lessons is the same as last week's, which is just hold and trust the trade plan. Now, of course, I did make some good gains this week. And if you took one single contract of every single call that I took in my signals chat, you would have been profitable with me not only this week, but last week as well. So every single trade call out that I do, if you just take one of them, you'd be profitable with me as well. But we could make some more money. There is a lot of money that I leave on the table, which is what I'm learning. And that's why we do the trade recaps so we can learn from our lessons and our mistakes. So although these were some very good trades and I collected 30% on a lot of these trades this week, I have to do better next week and even hold for more gains because these trades can pay us very nicely. So I hope you guys took some nice lessons from these trades. Looking back on it, hindsight in my favor always does the best because now I know what I need to do for next week. And if you guys need some help trading, join my free Discord and we can talk trading all day. Go in a voice chat if you need some extra help. If you want to go over any trade ideas, trade recaps, trade setups in general. If you need some further help, best believe I'm your guy to help you out with the best stuff you need to learn. Because as you guys can see here, my trade levels are perfect. My call outs are nice. I just leave a lot of money on the table as far as holding for more gains. So even though we take 30% exits, nice gains on these trades, we can make some more money together. Because every single trade that I call out, for the most part, printed well over 100%. So if I leave one runner, which is the lesson, I can maximize as much as I can off a single contract. So I appreciate you guys watching. We're only 3 subscribers away from 700. Next goal is 800. And of course, 1,000 is the big milestone. Not too sure exactly what I'll do at 1,000, but maybe I'll give people who do comment down a free month in my Discord, in my signals chat to also take out these trade calls with me, go live in the live chats, live trading, and you guys will be able to be a part of the community as well. So I offer 2 services, one being free and one being a premium. If you guys go on my website right now, you guys have the opportunity to join a free server with over 90 people in it. And I give you guys same thing, my trade ideas, but I don't give you guys the call out because that would be unfair for the premium chat. Now the premium chat is my signal chat where you guys can get call outs, all the call outs that I did last week, this week, and next week coming up. My entries, when I enter, and when I exit. So with all that being said, I appreciate you guys watching these videos. I appreciate you guys watching me as well. Of course, it's always every single day, it's a journey. Every single day, we got to work on something new. We got to improve. We got to get better on these trades. And I hope you guys watch all the way through to understand. This not only help you guys out, but it helps me out as well. You guys can learn from my wins, learn from my mistakes, and most importantly, learn how I take these entries, why I'm entering, the trade setups behind it. And I'll catch you guys on the next one.